Good morning, friends. Welcome to the SBI Securities morning podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. So yesterday's session for the the US markets were shut on account of Juneteenth National Independence Day. Coming to the rest of the major macro factors, so we had Brent crude which traded on a relatively flat note and ended yesterday's session at levels of $84.67 a barrel. It has formed a high wave candle on the daily scale, which indicates indecisiveness at the current level. Going ahead, any sustainable move above the levels of $85.18 a barrel will lead to resume its upward journey. In that case, it is likely to test the levels of $88 a barrel in the short term, while on the downside, the zone of 83 will act as the immediate support. Coming to the US dollar index, that is DXY. So DXY has ended flat at 105.22 level for the second consecutive trading session. Going ahead, the zone of 105.60, 105.7 will be the immediate hurdle, while on the downside, the 20-day EMA zone of 105 will act as the immediate support. Now coming to the update regarding Nifty in trade yesterday. So yesterday Nifty continued its positive momentum, especially in the first half of the session, with the index hitting a fresh lifetime high of 23,664 before experiencing slight profit booking towards the end of the day, resulting in the index closing on a flat note. If we see the daily chart, the index has formed a small body bearish candle with shadows on both sides, which suggest indecisiveness among the market participants at the elevated level. This marked the 7th consecutive trading session where such indecisive candles have appeared, highlighting persistent uncertainty in the market. Going ahead for the day, the support zone has shifted higher in the zone of 23,440, 23,400 zone. As long as it is trading above 23,400, it is likely to test the levels of 23,730 followed by the 24,000 mark. On the downside, if we see any sustainable move below the levels of 23,400 will lead to profit booking in the index up to the levels of 23,320 followed by 23,250. Now coming to the June derivative data, so if you see the futures has ended lower by 0.27% and the cumulative open interest of the current, next and far series has surged by nearly 1%, which indicates minor short built up. Among the constituents of the Nifty index, we have 11 stocks which witnessed long built up, 1 stock has witnessed short covering rally, while 25 stocks have witnessed short built up and 13 stocks have witnessed long unwinding. Coming to the weekly expiry data. So today we have the weekly expiry in Nifty. So if you see the put call ratio for today's expiry is at 0.97. So there is an equal match between the option writers both on the call side and on the put side. No major data at the current juncture, which indicates a one directional writing in any particular direction. So it's a mix of both the option writers at the current juncture. If you see the max pain, it is at 23,500, while for the monthly series, if you see the put call ratio is at 1.14. If you see the option chain, 23,600 has significant call open interest followed by 23,700 strike, and on the put side it is 23,500 which has significant open interest followed by 23,400 strike. Now coming to the update in Bank Nifty. So Bank Nifty, in line with our expectations, the benchmark index has continued its outperformance in trade yesterday. It has marked a high of 51,957 and thereafter witnessed minor profit booking in the final hour of trade, which resulted in the index closing at 51,400 mark with a gain of nearly 2% in trade. So Bank Nifty, if you see, has marked a fresh all-time high and formed a bullish candle with minor upper shadow. As the index is trading at an all-time high level, all the moving averages and momentum based indicators are suggesting strong bullish momentum in the index. Going ahead, the Bank Nifty is likely to continue its upward journey and test the levels of 52,000 followed by 52,500, while on the downside support has shifted higher in the zone of 50,800 levels. If we see the derivative data, the June futures has surged by nearly 2% and the cumulative open interest of the current, next and far series has surged by nearly 9%, which indicates overall long built up in the index. If we see the option chain for Bank Nifty, 51,500 has significant call open interest followed by the 52,000 strike, while on the downside if we see 51,200 has significant open interest, that is put open interest, followed by 51,000 strike. If we see the June expiry, we have the put call ratio which is currently at 1.03 and the max pain is at 51,000 strike. Now coming to the key market indicators, so we had the volatility index India VIX which marked a low of 11.63 and thereafter witnessed a pullback from the oversold levels. It has ended the Wednesday's session at 13.71 with a gain of nearly 6%. Going ahead, the zone of 11.7, 11.6 will be the crucial support for India VIX. In trade yesterday, if we see the advanced decline, the overall advanced decline ratio was tilted in favor of the declining counters. So clearly the rally that we saw in trade yesterday especially was clearly witnessed in the frontline major private banking and financial counter stocks. So that's why we had Fin Nifty and Bank Nifty clearly outperforming in trade yesterday. Coming to the key sectors in focus, so like I mentioned, Bank Nifty, Private Bank, Nifty Financial Services, these are the sectors that are likely to continue their outperformance as well in the next couple of trading sessions. Nifty IT is also on the verge of giving a bullish pennant breakout on the daily scale. Any sustainable move above the levels of 35,200 will lead to a sharp upside rally in Nifty IT. In that case, it is likely to test the levels of 36,000. Now coming to the update in FI DI data. So both FIs and DIs were net buyers in the cash segment yesterday. FIs purchased to the tune of 7,908 crores while DIs purchased to the tune of 7,107 crores. If we see the long short ratio for index futures, currently it is at 54.12 on a net basis. This as they purchased about 56,911 index futures yesterday. On the stock futures front, FIs have bought to the tune of 12,521 contracts, while on the options front, FIs sold 32,540 call contracts and they simultaneously sold 35,870 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.